All right, do we have any guests? If not, I will start in a minute regardless and just go over what I wanted to go over in the original post. All right, one more minute. Looks like we have a few people. All right, guys, what's going on? This is Ryan with Blockroots, and it doesn't look like we have a tremendous amount of viewers, but nevertheless, we have enough. So just keep in mind if you are here and you want to ask any questions, you could feel free to ask anything that your heart desires in the live chat to the right. So what I said earlier, I wanted to talk about the tape. Okay, so the times and sales and the DOM, so the depth of market. Now, on traditional exchanges, okay, you'll have an actual order book. All right, you'll have the time and sales. You'll have a depth chart. Okay, with regards to how deep the market is in either direction. All right, so if you are on GDAX or Coinbase, rather Coinbase Pro, or if you use Binance, okay, what you'll actually see is that there's a similar setup to what we're looking at right here. So I'll actually open up the Binance app real quick just to give you an idea as to what I'm talking about. How these are actually different, how what you have on Binance is actually likely going to be a little bit different, all right, or what you have on your other exchanges will likely be a little bit different than what you're looking at right now. Okay, typically you'll have, sorry while this loads, you'll have this basic setup. Okay, so you'll have the actual, oh, yes, before we go into this, I used to use Binance. All right, I can't remember the last time that I have used Binance. I don't remember the last time, honestly, that I traded any one of their I won't say anything harmful, but just put it that way. I'll just end the sentence rather. They had popular coins for a little while, their exchange listings, and moving on. So you have the basic setup. You have the actual order book, okay, which you see right here. These are all resting orders. All right, for the most part, you can tell that right now, all right, there's not a tremendous amount of liquidity in regards to Bitcoin. So we don't really see any kind of stacking on this particular book. I wonder if pre essentially gating or filtering of United States traders and investors. I wonder if before that, essentially, Binance lost a good amount of its trading participants. You got to think that a lot of people in the United States trade crypto, and Binance was, pretty much the most popular exchange, all right, I would say. So I wonder if the fact that this book always looks so empty is due to the fact that they are not allowing United States citizens to use them come September. So either way, so on this exchange, on your traditional exchanges, what you'll have is you'll have this order book. All right, so you have the actual offers above. You'll actually have the bids below. Okay, and these are essentially resting orders. So if we're going to be placing a limit order, all right, to buy, right, we're going to be under the actual market price. All right, our order is going to sit here. Now, depending on when we actually got into the queue, we either will get filled as priority, or we'll be behind the line of people who came before us, essentially, at particular prices. Now, this is the offer, so this is all the resting offers right now to actually sell. So based on limit offers, and essentially, what moves the price around, not to get into an extra, exactly to get into a lesson in regards to what moves price, but what moves price is essentially market orders. Okay, so market orders actually hitting the book, okay, hitting the offer, hitting the bid, and taking liquidity from the book rather than providing liquidity. So if you place a limit order, you're providing liquidity. So this is the basic order book on Binance. Okay, what it doesn't say, all right, it doesn't say the amount of volume. Okay, the volume profile, adapting volume profile for particular prices. It doesn't have that, so it's just a pretty simple order book. On these types of order books, what you will see is prices flash in and out. So you have that spoofing behavior sometimes, where what happens is, for example, when a particular large trader, especially on the small sats coins, say for example, someone was asking how people manipulate low sat or thinly traded assets in regards to alts. So they're asking how they manipulate it, and essentially, what will happen is, for example, one of these low volume coins, BTCB, wow, volume 1. Look at this. That's when the chart is terrible. Okay, what happens is, all right, a trader who has a large quantity of this asset, let's say, wow, the volume on this is terrible. A trader who has a large quantity of this particular asset, okay, if they want to get more of it, what they'll do is they'll flash a large order to sell, okay, and then other traders will look at this and say, well, if this large, investor or trader is trying to unload, what am I doing? Why am I trying to still be in this? So what they'll do is they'll jump the position, okay, ahead in the book. They'll actually sell, pushing the price down for this person who has the large sell on. And then when price is pushed down to a certain point that they're looking to buy at, what they'll do is they'll actually lift their offer and they'll actually buy up the supply. Okay, so this is how manipulation occurs on these low sat coins. Now, getting back to what we were originally talking about, I was talking about that I opened with the previous platform was a TT platform. And there's an exchange that Josh and I are going to be talking about in a short amount of time. And it's an exchange that actually operates and uses the platform that I would typically use if I was trading futures. Okay, I actually use it to trade Bitcoin on my spot account. All right, so I will use the TT platform, Trading Technologies platform, to trade futures and trade futures in traditional markets, I should say, and trade actual spot Bitcoin on Coinbase Pro. So that platform is actually going to be used by a new exchange, all right, that has recently started up, and we're going to do a whole piece on that, just so we can really get into that and talk about what it features. But that's what platform that I use, all right. This platform doesn't have the level of sophistication that one does. So we just have the order book, we have the times and sales over here, so it's a trade history. These are all the actual trades that have gone through, so the market orders that have gone through. All right, so this is what you would call the tape. And then the depth chart on Binance, okay, on other exchanges, is going to look like this. So it's going to look like, you have the offers here, okay, limit orders to sell, and then the bids here. So this shows us how deep the market is in either direction. All right, and this also shows us, this gives us an idea as to how much money it would take to actually move price. So if we're looking at, for example, Bitcoin's chart, all right, what's going to happen is as price moves, this is going to flash and this is going to start looking, different with every change in price. You're going to see this, start to turn in this, this whole bid over here might, start to drop off, and then the offer will start to really turn into a big block essentially. All right, at particular areas of resistance, you'll see it start to pile up, for example, when the actual book is piling up as well. But what this shows us is how much Bitcoin you have to actually buy or sell to move price. So it'll say, for example, that if we want to move price up to $9,700, okay, we have to buy, in this case, we have to buy 17 Bitcoin. Okay, so if we want to move price down to 9,675, okay, we have to sell, market sell into the book, all right, 49, okay, Bitcoin to move down to this point. Now, this is just a basic setup. So this is just what you'll have on a basic exchange. It doesn't allow you to show, it doesn't allow you to filter rather large orders on the book, okay, to appear differently so that you can see when large orders are hitting the book, or rather not hitting the book, but hitting the tape. Okay, so in the case of maybe hitting the book and then actually showing on the tape. Okay, and this doesn't show you an actual working order profile or volume profile for these current prices. All right, so for the bid and the offer, it doesn't show us where particular areas were popular in terms of selling into or buying into. Now, what I was on just a second ago was a TT platform, and I was talking last night, okay, about, let's just go to my post real quick. Okay, 1 second. Right. Sorry if there's any bit of lag. Hopefully there isn't. So let's go to profile. Okay, what I was saying last night was that, okay, so I posted this video, all right, it said rolling back the tape. Again, I'm not willing to think bulls are giving up just yet. Okay, so I put 2 arrows on this chart. All right, rather I put 2 arrows on this video to indicate what I was talking about. I tried to use something that I could actually illustrate on the chart with, but I couldn't. So look at the arrows as the velocity of sales increases until eventually flushing a few million into the book and being absorbed decently. All right, so I was talking about looking at the times and sales. Okay, I think I posted something else as well in regards to this, but we'll just move along. So what I was talking about, okay, in this video was the actual times and sales. And you can see it, it's flashing. And what this is, okay, this is the times and sales on this book. And what I do, okay, if you sign up for this platform or if you use this platform, okay, when Josh and I talk about the new futures exchange, okay, and you use this platform, what you can go into it and do is actually go into times and sales, and you could choose to highlight, okay, times and sales that occur over certain quantities. So say I want to make sure that I am picking up on every time that, you know, an quantity in excess of 10 Bitcoin, okay, is either bought or sold. Now what I'll do is I'll put highlight quantities, okay, and in this case the highlight quantities are for buys that are green, okay, so the background will show up green, and for large sell orders it'll be a red. Okay, and why this is particularly useful, I'm going to get into that in a second. Now, this is the order book on this exchange, and what you're going to see on the right of it is it tells us the actual volume profile, okay, for what particular areas the larger amounts of volume took place in. Now, how do we actually use, okay, an order book, all right, when we're trading, all right, for example, how can an order book be useful, all right, to spot particular areas where maybe we might want to get in, all right, or maybe where we might want to get out. And it's actually a bit more useful to, all right, what I'll do is I'll move this, just clean this up a little bit. It's a little bit more useful to have these two right next to each other. Okay, so what we're going to actually look for, okay, is something that we'll refer to as a certain tape velocity, okay, or the speed of the tape, all right, around certain areas. All right, so if we're thinking about what we consider important areas, we're going to talk about supports and resistance. So let's just say, okay, let me just wait for this to load real quick, because this is kind of a, in terms of the load, I think that this actual platform, all right, puts quite a load on your computer. So with all these things open right now, including a live stream, I could tell that this is lagging a little bit, which is not good. Okay, we don't really want any latency, all right, in regards to the actual platform that we're using. But right now, all right, I'm talking about how you would use the times and sales or the tape and the actual DOM in order to see potential areas where there might be strength, or strength on part of the buyers, strength on part of the sellers, okay, or certain areas of weakness, for example, okay, on either party in to the flip side as well. So weakness in the form of weak buyers or weak sellers, and how this can be particularly useful, okay, around certain key areas. So let's just say, for example, all right, that we are just in the case of, all right, Bitcoin right now, let's pull up a volume profile. Okay, that's another thing that's particularly useful. I'm just trying to get that word out perfectly now. Okay, volume at price. Let's let this load up real quick. Create. All right. Okay, so you see where it starts to drop off. Okay. Oop, loading it. Come on. All right, let's just leave it right here. One sec. Ooh, why is it stalling up like that? Sorry about that, guys. See, something's up. Okay, so let me just get rid of this real quick because now this is a pain in the butt. Just add that again. All right. We'll just add the basic chart. Excuse us for this mistake. All right. Okie dokie. Okay, so if we are going to be using this to see where potentially, let's say that buyers are showing strength or buyers are showing weakness in some cases, or sellers are showing strength and sellers are showing weakness, okay, what we're going to be looking to do is to find, all right, confluence between, all right, the actual order book, all right, in the case of bids stacking up, okay, or offers starting to stack up. And then around certain areas, we're going to be looking, okay, for either a decrease in tape velocity or an increase in tape velocity. So if we're talking about, let's just say we're talking about, for example, 9,673, okay, as being an important support, okay, and in this case that, let's say 9,700 and let's say 32, okay, is an important resistance, okay. So what we're going to want to see, all right, if we are a buyer, okay, if we are a buyer and, for example, we are looking to buy at support, okay, what we're going to want to see is strength in the bid, okay. So you'll hear this term thrown around, okay, bid stacking up, strength in the bid, okay, and what we'll want to see, all right, so you see how there are these large orders currently right now, okay, but you'll see these stacked below market, all right, and sometimes you'll see them stacked very much below market when, all right, the market is, the sentiment is that price is likely to move lower. Okay, so not necessarily the most positive sign when you have a really strong bid, much lower and a lot of weakness up here. Okay, but nevertheless, when we're moving towards a particular support, all right, what we're going to want to see is that the bid starts to stack up. And unfortunately, price right now is right in the middle of this range, so we have a more or less neutral setting in terms of the bid, or not much support rather, while there is a large amount of pressure in the offer. So you can see price is starting to pop down, okay, and what we're going to want to see, okay, if we are someone who's a seller, okay, we're going to want to see this continual strength, right? So we see how the offer is flashing in, okay, heavy, and now it's, okay, as we drop down, that order was just, let's see if that highlighted, okay, come on, why aren't you highlighting? All right, nevertheless, when we approach a support, okay, so say we're coming down to support right now, okay, what's happening right now, someone is market selling right into the bid, okay, so you're seeing price, all right, that's why price just slammed down for a second. But what we're going to want to see, okay, in the overall bid is strength. So we're going to want to see a large amount of orders stack up as we approach what is supposed to be an area of support. So an important area of support should be showing on the actual bid. So right now, for example, you see this order to buy, okay, 30 Bitcoin, 34, flashing in and out. You want to see these orders start to stack up right below. You don't want to see, all right, an order see how that order just disappeared, okay? That's not exactly, all right, us showing strength. So an order flashing in and out, okay, sometimes that's to convey the idea of strength, all right, in either direction. But what we want to do is see when the order is rather static, all right? So when the orders are rather static. So in this case, we have a large order right now supporting at 9,684. All right, but we're not really seeing much of a presence right below. You know, we have a little bit more presence at 9,672. Okay, we have a big buyer down there, but this isn't exactly what I'm going to want to see, okay, if I'm looking for a tremendous amount of support. Because right now you can see on the other side, all right, we have a bunch of offers, okay, currently absorbing any type of upward movement. Okay, in the case of strength, what we want to see is that someone lifts these offers. So when price right now, see how price is showing a good amount of strength in the bid. Okay, we have a large buy order right now. Okay, but see, it's now we have people jumping right ahead of it. Okay, so this is good, but what we want to see is for these offers, okay, not to get pulled, but to get rather not to get lifted, but to get pulled. Okay, it would be great if they got lifted if someone hit them with an actual market order. Okay, but we want to see that the bears are actually pulling their orders. Okay, all right, to give us the impression that maybe price is left to resolve higher. All right, so currently right now, that's a pretty solid order right now on the bid. All right, this is not exactly the best example, okay, because of where we are sitting with price. All right, but you would see more presence of this as we approached maybe a higher time frame. Okay, a higher time frame support. What we have right now is a 1 minute chart. Okay, since I had to load that new chart, it went right down to the 1 minute. So let's just load a higher time frame chart. Okay, on TT, it allows you up to hourly and then daily. So you're not going to get a 4-hour chart in that generic setting. So let's just say, for example, we were coming back down to, okay, 9,410, just for the example. All right, at that point on the higher time frame, we would want to see that we really started to stack up. All right, now we have some presence in the bid. Okay, but what it is showing us is that their buyers are supporting a level. Okay, and you'll see when price is in more or less a no man's land, okay, you'll have a pretty wide gap or a decent window in terms of support, okay, and resistance from either the bid or the offer. Now, when I was talking about, all right, the importance of the tape, okay, when buyers or sellers, all right, are starting to gain momentum, we will likely see, all right, a large amount of large orders hit the tape, okay, and usually they'll start to speed up. Rather, you'll see one progress after the other. Okay, and what happens is one side eventually gives up, and you'll see that, for example, I showed that video last night where, you know, you'll have an order that's someone sells 5 Bitcoin, for example. All right, then another order comes to follow where it's 10 Bitcoin. Okay, and at that point, you'll see, in the case of if it's, let's say, sellers hitting the actual bid, you'll start to see weakness in the bid. All right, okay, giving you the impression that buyers are actually capitulating, in the terms of rather buyers at support are capitulating, okay, and then when sellers begin to take over, you'll see a large amount of these actual orders hit the tape. Now this tape, again, right now is not moving for some reason. Okay, let's see if I could get this guy going. All right, now we have some action. But what we'll see in strength, okay, in strength of buying, okay, or rather strength of buyers or strength of sellers, we'll start to see a large amount of these orders start to hit the tape, okay? And especially if for example, you know, we have mapped out certain important areas of support and resistance, all right? And say we are approaching let's say we are approaching for example, a higher time frame support, all right? And we don't have much presence on the way down, but when we get down, we see one of these large buyers start to kick in, all right, and really show their presence. All right, what we don't want to see is just that presence alone. All right, in the case of support, all right, when it's going to be rather if it's strong support, okay, or in the case of strong resistance, we don't want to just see the offer actually on the book trying to feign, all right, that existence. What we want to see is that presence on the actual tape to show us that, you know, in the case of a buyer at support, maintaining that level, or a seller at resistance, okay, trying to protect that level. All right, and this can the use of this, all right, these two tools together can give you insight into whether an area is going to, for example, provide a significant amount of support or provide a significant amount of resistance. Now, I know this can all get kind of complicated, and it might confuse anyone who's kind of new to this, all right, but a lot of people who are trading futures, for example, are going to spend most of the time actually looking at the DOM. All right, so most of the time looking at the DOM, and most of the time actually looking at the orders that have gone through. What you'll see on a lot of exchanges is that that game that's played with actual orders flashing in and out. Okay, and what this is essentially like trying to bluff in poker. All right, so think about it like that. If an order, for example, or rather if a buyer is trying to fake out the other side into thinking that price is going to move up higher, okay, and you have someone who's currently trying to short, all right, them showing a large amount of support in the form of actually having large orders on the books, all right, might have anyone who is currently in a short, okay, or thinking about selling or thinking about taking a short position could have them thinking twice. Now, a lot of the times this actually is just some form of what some people will call manipulation, but it's not manipulation, it's just a game, really. So this is really just a game. This is trying to convince the other side, all right, that you are, have different intentions than you actually do, maybe. All right, and in some cases, like we said with the altcoins, it could be a case where, for example, where buyers are showing up in the actual bid, okay, to make other participants think that the market is going to pump up, and at that point, maybe they are actually just getting out of the position. Okay, so if, for example, some retail Joe comes in and sees that the bid is really strong on altcoin XYZ. If he sees the bid is really strong at certain areas, maybe he thinks, oh, the price has a lot of support, it's going to go up. All right. At that point, he buys in, and really he just bought and provided liquidity for whoever was trying to get out, faking that large order. All right. Now, that is a little bit more prevalent on some of the low sat altcoins. All right. So that's why you have to, as a caveat, you have to be really careful when you trade those lower sat altcoins. All right. It's from liquidity reasons. All right. So the lack of volume, the lack of liquidity. All right, you essentially can move that market around if you have just a few $1,000s. And two, because there's a good amount of that, game playing that occurs on those lower sat coins, because it's easier to do. All right, it's easier to do that on low sat coins because you could do that with just, like I said, a few $1,000s. So the barrier to entry to play that game is really low, whereas the barrier to entry to play that game on Bitcoin is, substantially higher. So that is the tape and the order book. So what we want to see is the presence start to show up. All right, so not just using a technical level and saying, okay, this is the line in the sand, and this is the line in the sand because it's been the line in the sand. All right, if price starts to move down to a certain area, rather imagine that price is moving. Let's say that, for example, let's stay consistent with this right here. Let's say that this is, for example, right here, a major resistance. All right, just think about this area and this area. These are major resistances, okay, that we have to get through for price to resolve further up. So if we think about these being major resistances, and if as we're making our way up, okay, the offer is showing significant weakness in the form of, okay, in the form of that it is not actually showing any kind of presence, okay, and there's no one willing to sell at these prices, well, then price will likely have no real resistance to actually worry about contending with, okay. And the same works to the flip side when we're approaching a major area of support. Okay, if we don't have anyone stacking up in the bid, I wouldn't suggest really trying to be the first one to actually maintain that support in that case. All right, what we want to do, all right, is try to find opportunities where we see this presence, all right. And then if you are a smaller trader, this is where the idea of front running comes in. Okay, if we are, for example, approaching an area. So last night what I said was, the orders were hitting the tape rather quickly. Okay, so what I was seeing, this is what I saw, which actually made me think that price had a little bit more room to move up, okay, before ultimately maybe moving back down, okay, was that there were a few things. Okay, I'm going to talk about the remainder of this, and then I'm going to get to the volatility levels and how that affects our decision making and the pinching of the Bollinger Bands or any kind of channel indicator that you want to use in that case. But what we were seeing was, for example, all right, price was flush down, okay, flush down, but we had that presence in the bid, okay. A large amount of orders were actually hitting the tape. So we had sell order, and then more rapidly, sell order, sell order, sell order, sell order. Okay, and in the case of last night, what I did was I had it set so that I would see orders that were larger than 10. So on Coinbase, I wanted to see any type of order that was larger than 10 Bitcoin hitting the tape. So I had those highlighted. So after, a bunch of sell orders flushed into support, and we only really moved down, I think it was like $26 at that point. After all those orders hit the tape, okay, what I started to see was the red started to taper off. So in the case of the red, that was the actual sell orders. I started to see a little bit more of the black, okay, which in this setting is the actual buy orders. And then I started to see those orders that I wanted to see from support, okay, where it was large buy orders, again, start to pick up in the opposite direction. So we would have an order for 5 Bitcoin, and then 5, 8, 10, 10. Okay, see, here's a large order right now. So right now, if we think about what we were just talking about a second ago, okay, we're at support, okay, and we have a large order hitting, okay, at around the area of support. And right now you could see there's not much presence in the actual bid, okay, until we get down, another, in this case it's another $10, but depending on the increment setting, you could have either these spaced out by 10 cents or, by $10. All right, but what we're seeing right now is a large amount of presence, okay, in the offer at resistance. All right, but what I saw last night again was when price moved down, all right, and the orders were speeding up, hitting the tape in the form of large sell orders. All right, there was a sudden pause, all right, where buy orders started to pick up and move in the opposite direction, and we had that presence in the book. All right, so through that, okay, it solidified my belief that the overall support would likely hold. And being that the area was holding, okay, and this, we should segue into talking about why support or why resistance ends up becoming weaker after each concurrent test. But, from last night, I didn't think that it was going to break down. All right, I thought that it was going to break up. All right, that was just what I believed. The way the structure looked, all right, the way we've looked in previous consolidation periods, okay, in a bull market, all right, when you're a trend follower, the assumption is that any kind of correction leads to continuation. All right, so one of the principles that a correction leads to continuation, it doesn't lead to reversal. So when I was applying that principle, all right, and sticking by that, I was thinking, okay, we have one more move to pop to the upside at least, all right, to test out the 97, 9800 area again, which would be the next resistance, all right, before ultimately maybe we'll move back down. But that's what I noticed last night. So I do want to cut right into talking about why orders, okay, or rather why when trades, okay, take place at a support or resistance over and over again, why it weakens the area, okay, and this actually does tie into what I was just talking about, all right, and how we were just talking about the order book, and if you think about this, it makes sense, all right. There is a flip side argument to it, okay, and it is based on, psychology. So I should say that it is important that you think that people make decisions based on their psychology, so maybe that ends up making them actually hit the bid or hit the offer. But nevertheless, support becomes weaker with every test if we think about it from the standpoint that if an area of support, like we're talking about right now, all right, so say we're over here, okay, first test, we have the offer, okay, meet the test, right? The offer stacks up, okay, a little bit is taken off in the form of sellers hitting the offer, right? Not sellers hitting the offer, sellers hitting the bid. So sellers hit the bid, okay, price moves sideways a little bit, okay, there's still presence, okay, there's still enough presence, so you have people watching this presence, all right, they see that there's a little bit of strength in the bid, so they mark it, okay, they're thinking, let me buy this right here because it's got a good risk and return, right, because we're basically at support, the risk return of this trade right now to resistance, all right, is favorable. So they market buy, okay, ahead of this support. Or maybe what they do is they place an order ahead of the support, a small order ahead of it at an increment right before where the major orders are. And they get filled, price pops up again. There's not much resolve though, there's not much follow through. So what we're gonna wanna look for, I should mention this as well, is that when price actually hits support, okay, and the bids start to stack up, all right, when price starts to move up, we still wanna see the actual bids start to stack up, all right, and propel price upward. If when price starts to move up, okay, we start to see the support fall off, all right, that's not necessarily a good sign, okay? We want to see the support behind price. So think about price as a structure, and we want to build that up with the actual bid under it. So what happens is price moves up, but it has no real, inertia or momentum behind it. So it moves back down and moves back down to support. We have the same dormant orders, okay? See, there's a large order right there hitting the tape. We have the same dormant orders, okay, previously. So orders that were not picked up at this point, okay, orders that were not hit by market sellers, right? So we have the same orders, price moves down, hits the actual bid, all right, gets a little bit of a jolt, okay? Again, same thing happens, bid is supported, okay, buyers see that this is still support, it's holding up. The same pattern happens, continuously. If price does not continue to resolve upward and continues to eat away at this bid, that's exactly what happens, okay? So you end up chipping away at the support that is here. So what is it in that case? Okay, we think from a supply and demand perspective. Okay, there is excess supply at that point. Okay, meaning there's more sellers up here. All right, than the actual buyers that remain in the bid. Okay, so the supply is overpowering the demand as we move along and continue to test this area. So what ends up happening at this point? Okay, you have two things that can happen. You can actually have this actually start to thin out enough to where someone will actually test the depth of this book and place a large market order to sell, maybe like that right here. Okay, we see this. Basically, this is a testing of the actual book to see how deep it is. Okay, and where price is actually going to get some pushback. All right, so you'll have that, or what you'll have is actual traders who are starting to see this weakness, and this is where you'll start to see price actually start to drift off. You'll start to see traders see this weakness. They're looking at the same thing you and I are looking at, and what they do is they end up just pulling their bid. Okay, they pull their bid. All right, at this point, this area starts, looking like Swiss cheese with holes in it, and there's really no support left for price. So what it ends up doing is it resolves itself to the next point where you actually start to have this same process occur again. The bid starts stacking up, and that's where your support and your resistance, okay, really start to manifest themselves on the actual book. So just think about it as supply and demand. Okay, so currently there is this much supply, okay, at this level, and there's this much demand to meet it. All right. To actually move price up, though, I have to be willing to market buy into this. Okay, I have to be willing to market buy into this and take liquidity off this book. So this is a more advanced way of trading. Okay, so it's not something that you could really cover in just one live stream, but nevertheless, it is particularly useful. And instead of just thinking about trying to discern whether or not, this is a real order that's trying to sell or this is someone trying to feign, okay, in the case now, we could see that it's a real order because not only do we have these orders stacking up, but we actually have orders hitting the offer, okay, to actually sell. So we are seeing that price is actually moving down. So we're starting to see weakness here. We have someone right here is currently pushing price down. Okay, we actually see the suppression now. Okay, you're going to see price push down even more. Let's go in, zoom in. Okay, a little bit of resolve. All right. If you're a buyer right now, what you want to do is see this offer get lifted or get completely hit. Okay, and that's what'll happen sometimes. When you see a large market order hit, they're just taking all of this liquidity off. So if you see a large candle, okay, that is from someone market buying or market selling, and what they're doing is just scrapping anything that's available right here. So in the case of a large buy, in this case we could see how much it would cost to actually move the price up to $9,700. So you can see how much Bitcoin, okay, in this right column it would actually cost, all right, in terms of us lifting the offer. So what I was also talking about, which is important, okay, and we'll cover this in more detail, more specifically in the future. I understand that when you do a live stream, it's could kind of get into the habit of speaking in ellipses. In my case, sometimes I'll do that. Get to one thing, get to another, get back to one thing, get back to another. But this is particularly useful when you're trying to identify whether or not we actually have the support and the resistance, right? So whether or not it's actually showing itself in the form of people putting offers or people putting bids on the actual book. Now, there's not much action going on in this tape right now. So you can see there's not much of any large orders hitting, okay? And I'm not surprised because of this current range that we're in. So this is chop. So this is the definition of chop. Okay, we're spending much time between this range. There's really no one overpowering the other side. Okay, and that's why we have so many of these little orders that are basically, it's like just the market makers going back and forth with themselves. But what I was talking about, okay, other than this, all right, I was talking about the volatility, right? So pretty much the entire move up, okay, what we had was this expanding volatility. Now, I wouldn't go ahead and start charting volatility, but this is just a good visual cue as to what this looked like, okay, for the entire move. So for the entire move, okay, it was one major impulse, okay, with this breakout, okay, volatility start to flash. It's basically six ways the market can move. Excuse me, I have to take a sip of water. The market can move up on high volatility or up on low volatility. Okay, sideways on high volatility, sideways on low volatility, down on high volatility, and down on low volatility. So there's 6 ways the market can move, or 6 degrees rather, in which intensity that the market, or rather lack of intensity that the market can move in. So 3 intense, 3 not intense. So moving up on low volatility, not a negative thing, okay? But we see this entire move, though, we're expanding in volatility. Now, a lot of the times, towards the ends of moves, all right, you'll have this fanning out, okay? You'll have this pattern where the overall volatility follows the actual structure, but what you'll have is towards the end, okay, and you can see up here, just to map out where these are, okay, equivalent to. Okay, we'll see this fanning out in volatility. So the pattern will look like this. Okay, so that's expanding volatility. Now, the important thing about volatility is that not that it's actually increasing, okay, or decreasing, all right, it's how it stays for a prolonged period of time. So if price or volatility, okay, in this case, remains one way for a prolonged period of time, okay, in either any extreme, rather in one extreme or the other, okay, we tend to have a reversion to the mean. So this is in the case of price action, okay, this is in the case of us, let's say, being extended on the upper channel of a Bollinger. This is the case of us being extended away from a fast moving average, okay, and this is in the case of actual historical volatility. So historical volatility is important because this shows us the entire volatility for this whole move. All right, so we could see, for example, where the low points were. So low volatility tends to lead to high volatility. That's how volatility gets interpreted. All right, so from a trading perspective, how we use that is we look at where there's a compression of volatility. Okay, so what happens when you have a compression in volatility? You tend to have a volatility expansion, okay, and that'll typically come in the form of an impulsive move. So there's a few ways that you could identify compressing volatility. So you could look at it from you could look at it and see it visually. So you could see a compression in the overall price action. All right. So what happens is the ranges will be compressed. All right. So if we think of the average movement for Bitcoin, all right. So think about something like the average true range. If the average true range is, for example, and let me just get I'll put on the ATR right now so you can see. So we'll put on the ATR, which is a particularly useful tool when you're trading equities, okay, if you're observing equities. So the ATR is the average true range, okay, and we could see at any point what is considered normal range for Bitcoin. So for example, at this point right here, okay, the norm was around $473. So give or take $473, and we are still operating within, normal standard deviation, just considered normal behavior. Now, as this expands, okay, I mentioned in another video, okay, how average true range, when it's starting to really expand, can indicate a top, because this indicates an increase in volatility. Because if we think of the fact that when price is low volatility, okay, the average true range is low. So look at a point of low volatility, average true range, okay, low. As volatility increases, okay, what we're seeing in volatility is an actual increase in, let's say, intensity of price movement, okay, or in this case, you can interpret it as range, right? So increase in volatility, that coincides with the time when Bitcoin is making a, run upwards, all right? So that coincides with this time down here where we have an increase in the overall average true range. Now, how we actually go about trading compression of volatility, okay, depends on what the actual trend is. So we have to take in the overall context of the situation to begin with. So I talked about trading breakouts in one of the videos on the breakout series, in which we have to take the higher time frame context into consideration for breakouts, or lower time frame context if we're on the lower time frame. But in the case of compressing volatility in a major trend, okay, we have to see we have to consider where we sit within the trend. So it is important to understand, though, at any point you can say that, all right, this trend has gone too far and maybe this next move should be down. Price should not do anything. It doesn't have to do anything. But what we'll do is we can identify periods of low volatility, all right? And in this case, what we can do is we can see this with, I took that off, never mind. You can see this with Bollinger Bands, okay? What you'll see in Bollinger Bands is you'll see that there's a tightening where low volatility occurs, okay? So periods like this, Okay, so see where this is really starting to bottleneck? Low volatility. Okay, bottleneck, low volatility. Now what happens after low volatility is you end up having an expansion. All right, so you'll typically, low volatility will be followed by high volatility. Okay, so just think about it as like just physics, right? So we are going to start expanding, okay, and go from a state of order to disorder. So along the lines of just if you're familiar with entropy. So what happens is we have a compression of volatility, and if we are trying to trade this, all right, what we can do is try to trade a breakout of this. All right, so we can use an actual method that we would use to trade a breakout, which in this case would be a really tight stop. All right, so in the case of compressing volatility, all right, what we would do in this case is use a tight structural stop, okay, because price is not currently moving in a strong trend at this point. It's compressing, and at that point, we want to be out of the trade immediately if we are on the wrong side of it. So in the case of a trend that is upward, all right, and where we have a compression of volatility, we would exercise a extremely tight stop, all right, to play a breakout. And in this case, we would assume that it's continuation, decrease in volume. We're going to see a decrease in that volatility. All right, and then what will happen is we'll have, in some form or another, we'll have price breakout, okay, either to the upside or the downside. Now, how would you go about trading this? Like I said, tight stop, and you can either, at this point, you can either enter in the trade prematurely, which I actually don't suggest for breakouts, or you could use an actual market order, okay, a market buy stop. So a stop buy. So what will happen is you'll put an order that is above, okay, what the range is for this overall range before the compression occurs, and you'll say that, for example, let me take off this volume profile because it doesn't allow the chart to compress the same. Say, for example, we're trading anticipation of a breakout over here, okay. What we'll do is we'll say, okay, I'm going to place a market buy order, okay, above the range, okay, because after this compression of volatility, I'm looking for an expansion of volatility. All right, after a compression, expansion typically leads to continuation. All right, sometimes you will have a fake out, and that's why we use a tight stop. But a lot of the times what we'll have is continuation. What we'll see, we'll break out at that point if we're using a market stop, okay, a stop buy rather, we're entered into the trade, and what we'll want to see is overall volume to pick up. So we want to see volume to pick up at that point to confirm that this is likely to be continuation. Now, what we were looking at over here was the same thing, okay? Except in this regard, all right, I considered the price was going to move up, all right, for the reasons I mentioned earlier, all right, in the case that we saw the strength in the actual bid, and I was watching, or rather observing, that all efforts to actually move price down were being absorbed. So in this case, we're not looking for this to continue, you know, all the way up to 12,000, but the first target would have been $9,700, $9,800, right? The low of this range. Okay, this low of this previous range, this previous structure. Let me just take this Bollinger Band off the chart. I don't like too many things on the chart. Like I said before, it's too noisy. So what I was seeing was the strength in the overall bid, okay, at which case we have to think about where our first target is, and the first target we could say is this structural area, where you can see this is right where price wicked off of. All right, we're not just longing this with the hope that we're going to hit a new high. But what we are seeing, okay, from a macro perspective, okay, in terms of this larger move, is we're starting to see, all right, see, I speak in ellipses. I'm getting back to my original point after I've, you know, gone around in circles. What we're starting to see is the same compression that we were seeing earlier in these moves, okay, except that this compression is after, all right, we formed what appears to be, all right, a lower high. So we had the lower high, okay, a lower low, all right. If we're considering this a low, not necessarily though, if we're considering this a low, all right, what we're having is a potential trend change. Okay, so at this point, you have to take this with a degree of caution, because when we have this compression and volatility, we have to also consider that while this support was maintained, okay, this support was maintained, but so is this resistance. Okay, this resistance is still fortified. So what we're going to see likely is that price is going to do what it's done, move sideways. we're going to see this drop off in volatility continue until we actually have one side completely, not to be crude, smash the other. So what we'll see at this point is, all right, this is where behavioral psychology comes into play. So everyone is observing, okay, that we're having this compression of volatility, okay? Typically you'll see that, there's herd behavior on CT, right? So you see, something start to get shared, and then eventually it's all over, and it's unavoidable. You'll start to see that, everyone's post is going to be, we're compressing in volatility. The volatility is the lowest it's been, blah, blah, blah. So everyone is aware of this pattern occurring, not a pattern of actual price action, but this pattern of events occurring. And we all know what happens with compression of volatility. So we all know it leads to a breakout, okay, or an impulsive move. Okay, so we will have traders looking to take advantage of what direction the swing's in. All right, so not likely to have, what's going to happen is likely an aggressive, if you're an aggressive trader or, aggressive traders will either take advantage of this and probe a certain area to see if they could test either market stops to buy or market stops to sell to see if they could create that cascade. That, or you'll actually have one side end up giving way, all right, and be just weak enough to allow the other side to tip the scales. And at that point, why do you have a breakout? Well, you have a breakout because of all the momentum that's built up in the form of those orders that are anticipating a breakout. So price moves sideways long enough, everyone's anticipating a breakout. We're all going to be trading a breakout, likely the same, okay, which is, okay, you'll see people either in the case of if price moves down, they'll market sell immediately, okay, because the first candle after a compression of volatility is likely to be an abrupt and large one. So the first time that we see that, we know that one side is lost. Okay, what we'll have is, in the case of price moving down, everyone hit the market sell button, okay, creating this pattern of low volatility to high volatility to a large impulsive move. Or to the flip side, price moves up, it grinds up, pokes through, everyone notices this same event occurring, and market buys. At this point, which, potential to happen that we've made a higher low. So, on the topic of segueing, how I've done that, that is one thing to point out. This pattern that is occurring, okay, is a higher low, all right? And while it makes sense that price, I guess this is going to take me into my view right now about where Bitcoin sits and why, although it is normal for price to have moved down to the moving averages by this point. Okay, I talk about the, if I open up, let's say if I open up the 50, we pass through the 50, what happened to my 100? Oh, I got rid of my 100. How did I do that? Let me just put on my moving average again. Okay, so the 100 moving average is I could actually just load to the chart. The 100 moving average, the 150, and the 200 are always going to be on my chart. If they're not visible, it doesn't matter. They're still always there. So these are very important areas for long-term trends. Okay, so previously in Bitcoin's trend, okay, after a markup from a period of accumulation to bull market, it's come down and tested this. By this point, it's already tested it in previous bull market, right? It doesn't matter though, because the average is just that. It's an average of the period of price action that occurs based on the actual period setting. So all that's required for us at this point to actually touch the 100 is for price to move sideways long enough. And then there we have it. We have our grinding period, which price touches the 100, and then fine, we finally satisfied that requirement, which isn't a requirement, but nevertheless, it is what everyone's looking for. So everyone's looking for the first time that we touch the 100, which can come off of sideways moving alone. At this point, there's a high probability likelihood, okay, that we actually have bottomed. Okay, and I'm going to say this now because it is important to adapt with new information, right? So what I'm seeing, okay, is, and I'm going to stand by this, and if I'm wrong, then I'm wrong, but what I'm actually seeing is a higher low start to be formed, okay? So if we think about just crudely drawing this low right here, and this low right here, it's actually higher, okay? And we had that down here as well, a higher low, just marginally higher. Just that much was required, right, to maintain the trend. So that's what I'm noticing, all right? We are making what seems to be like a higher low. We have support in the bid, Okay, Bitcoin is still in a bull market, so there's no reason why we should assume that price has to do anything. Okay, it didn't have to go up 300%. According to everyone, it should have got its ass kicked, at 6,000, but it didn't. It didn't get its ass kicked at 6,000. It just cut right through it like a, like a steak knife through butter. I was gonna try to make that even better, like a steak knife on a fire through butter, or through mayo. That's even better. That's disgusting. But nevertheless, that is occurring. So it is very possible that this is the beginning of a sideways move, all right, that ends up leading to our next move up. Okay, mind you that we are this move was occurred rather rapidly, and we could spend some time moving sideways. I said that it's possible. Bitcoin doesn't seem like it's possible. Rather, that Bitcoin can do much of ranging. Okay, besides move up or down. So up for us to make our next move up. So after we move sideways, we could be setting up for our next move up. Okay, the price does not need to really move much further down. We've seen support already immediately. Okay, and I know Twitter is okay. It's a small part of everything, but there is something to be said for a large group of people thinking and believing the same thing. All right. I know not all the traders that trade Bitcoin are on Twitter, but if we think of the wisdom of the crowd, okay, we could almost assume that. Just think about if we've had. Let's just try to come up with an example real quick. Say we've had. Say we have had, for example, a big jar. All right, and in the jar were 1,000,000 M&Ms, and 50% of the M&Ms were white, 50% of them were black M&Ms. Okay, and we shook the jar up. Okay, based on distributions, right? If we took a large enough amount of that jar out, okay, that small portion of the sample size, okay, there's a possibility that it will be close, okay, not exact, but it'll be there's a high probability, that it'll be very close to the overall average. So if it's 50-50 and we've distributed it, rather evenly, there's a high probability that when you take a handful out of there, you'll have, if you take 20 out, you'll have 11 whites and 9 blacks, right? It'll be more or less very close to the overall distribution. So when I think about human behavior, that's how I'm thinking, actually. I'm thinking, okay, so a large amount of traders on Twitter, okay, most of the people that I'm observing, okay, on CNBC, most of the people I'm talking to, they all are saying, oh, Bitcoin has to come down to 8,500. Well, if Bitcoin has to come down to 8,500, and we're all thinking that, and we are all have sold as much as we're going to sell, then who is left to sell, really? So think about it that way. If everyone's saying it has to move down, okay, then likely all of the selling is already priced in, and there's no one left to sell into what is supposed to be the downside target. Okay, this is not anything to say that is rather this is not necessarily actionable reasoning, but nevertheless, it is a possibility that is actual accurate reasoning. Okay, in this case, so that's what I'm noticing. All right, I'm seeing a large amount of strength. Okay, down here now. We have people, another thing that I'm noticing, and this kind of goes back to fundamentals. So one of the videos, all right, so for everyone who's watching right now, we have up, right now I think we have like 33 videos up, and within the next week we should have another whole 10 videos in content, right? We're trying to get a really good idea as to what you guys want to learn. We're trying to cater this as much as possible as a small company right now to the actual loyal people that are following us, right? But we're going to be loading some things that are for beginners. They might bore some people, okay? And we're going to be loading some things that are advanced that might be over people's heads. But I want everyone to have this, all right, for what we're going to introduce next, okay? I'm not going to get into that, but I want everyone to have this archive of things they can refer to when they are not sure, okay, when we are doing what we're going to get into next. So, and I don't mean next like in this video. So, what I was saying was that what we're talking about is one of the basic videos that I loaded, and it's just on volume. And it's the idea of that volume must confirm the trend. So what that means is that in a actual bullish trend, what we want to see is let me take this off. Okay. What we want to see is that volume is moving up with price. Okay. So what we'll see is that for a move, volume is extending upwards. So look at the volume average, actually, because you could get thrown off thinking, oh, well, what about the volume bars down here? They're pretty much lower. Well, this is because these large bars are towards the end of tops, okay, because In tops and commodities or Bitcoin, for example, you have to think that just as Milton Berger was talking about in the video on Real Vision, that spikes happen towards the top because we have in a zero-sum game, okay, for every long there is a short. So as price is moving up, fear comes in the form of shorts covering and price spiking. Okay, so we have this V pattern towards the tops of these structures, which is the spike in volume as well before eventually turning back down. But in a pattern that is moving up, okay, so think about price moving up. Okay, what we want is for volume to do the same thing. We want volume to go up, and on the move down in price, volume go down. On the move up, volume go up. On the move down in price, volume go down. What we don't want to see, okay, this is for an uptrend. We want to see an uptrend in volume, and on the corrections during these moves, whereas for say we come down and we come down and we come down, what we want to see in a move that has continuation potential, okay, or rather is in a trend, okay, an upward trend where we're assuming that the trend is going to continue, okay, because that's another thing, okay, until the trend changes, we're still in a upward trend, right? That's one of the stipulations of trend following is until the trend changes, it's not changed, okay? Nothing changes until something changes. So what we want to see in this pattern, okay, of higher lows and higher lows is for volume to go down when price is correcting. So when price is correcting, okay, for volume to decrease, okay? So you see these peaks and these troughs, okay, volume peaks, volume is correcting, okay, rather price is correcting, but volume is decreasing too. This is a good sign. What we don't want to see is what we don't want to see is what we actually see right here. So if we go down to the lower time frames, since there was a lot of selling, okay, in this last move, what we don't want to see is what we actually have for this move, okay? So we're selling, okay, and volume is increasing on the move down. So what that says is there's more momentum to the downside, okay? But that was for this period right here. We're not necessarily seeing that over here. What we're seeing is more or less that we're starting to find a balance, okay, which is really good. We want to see that. If we're going to assume the price is going to continue upward from here, we don't want to see any more large spikes in the form of sellers hitting the bid, okay, large spikes. What we don't want to see is an increase in red volume, okay, moving down. It is important to remind everyone, though, that when the bar is red, it doesn't mean it's all selling, okay? We know that from this large bar right here in price action, okay, that there's a lot of sellers in that bar, but there were buyers in there too, okay? It just is red because it was a bar that finished downward, okay, that closed below. But what we have here actually starting to line up, okay, which for some reason, everyone loves TA, okay, but everyone forgets the basic tenets of TA is this simple volume confirming price, okay, rule. All right. If we are trading this from the other side and we're looking for shorts, or in that case, what we would want to see is volume increase as we move down. We would say, okay, I think the trend is changing. Or at this point, when we break this low, for example, we see price increase. Okay, then it's like, all right, maybe we should step back and take a look at this. All right, maybe the trend is changing for a little while. But nevertheless, okay, we're flattening out. Okay, that was a terrible, I should just stick with lines. I'm a poor artist. Okay, flattening out at this area of support, okay. Volume is decreasing. That doesn't mean that support is decreasing, okay. What that means is that buyers and sellers are starting to find a balance, all right. We're not seeing any side really do much damage to the other. We're seeing more of a balance, okay. What I would want to see for this move, and I hate to be the person that says, oh, for price to move up, yeah, I want it to move up past $11,000. Well, obviously, at that point, what good is that though? The move is already, you know, if my trigger is that I want to see price to move up past $11,000, well, yeah, no shit, bonehead. Excuse me, but at that point, it's already 15% behind us, and there's no reason why, you know, all it has to do is get rejected from this next level. Now we know that one of the reasons why this argument becomes a little bit more substantial, actually, though, is because since crypto is so heavily TA based, the trading is so technical based that, again, it becomes in one of those self-recurring patterns where those feedback mechanisms where it's a self-fulfilling process where when we move up, you know, all of us are saying, okay, the trend is upwards now, and you know it's best to be on the side of the trend. In that case, we create the momentum. So I put up a video on momentum, all right, in which case we're talking about this serial autocorrelation between price behavior. So each move up, okay, is likely to cause another move up because one, it boils down to, all right, human behavior. Okay, so herding mentality, herding behavior. When the price goes up, people are more confident in buying something. Okay, this is a silly thing because if we're talking equities, for example, when prices are really high, that gets retail excited, but that just looks like it's expensive to me. Okay, it looks like it's expensive. When prices are low, it looks like it's cheap, unless we're trading something that is completely useless. All right, that's how you have to look at it. But retail sees that and they say, okay, it seems safe now, I could get in. Nevertheless, what I'm looking for, okay, I would expect, all right, even an area like this, okay, I would say that my area, all right, where I am really confident in a long is over 10,200, all right. Now, why 10,200? Let me zoom out a little bit. Volume profile, okay. 10,200 on volume, okay, sets us up for, okay, here. You could say these are likely to be the next areas. You could say that this, at this point, if we're up here, I do not think we're going to have any resistance. But we're just mapping out right now where the areas are lining up, okay. Now, while these might pose a resistance, all right, in between, in a normal range, right? In a normal range, these would likely pose some type of resistance. But in my opinion, where we are right now with Bitcoin, okay, if we cross 10,200, all right, that is the area where I think buyers are going to start getting really confident that what this is over here, all right, what this pattern is over here. Ooh, why is that happening? Excuse me. What this pattern is over here is just this pattern, essentially, where we flattened out over here, okay, is very much similar to over here. Okay, and at that point, what I would be assuming is that this is definitely going to be continuation to the upside. So continuation to the upside upon a break of 10,200 on volume. The last thing that I want to see, and another thing, if we break 10,200, again, what I want to see is for that book to really start stacking up. So in the case of, I'm not even going to wait for this to load right now. For some reason, everything is going really slow right now. In that case, what we would want to see is the bids start to really stack up and start to really show support, all right, on the actual book, all right, in the form of buyers stacking up under the actual price. All right, so buyers stacking up, and weakness by sellers would be great too. But we would want to see an increase in volume too. All right, last key point. Upon a break of 10,200, what I want to see is for this trend change to occur in volume. So where we start to move up again. So if you use the volume moving average, or if you're just going by the actual histogram, okay, what I want to see is the same trend to occur. Volume start to increase. All right. The last thing that I want to see, okay, and just as a caveat, because it wouldn't be, out of the range of normal Bitcoin behavior to move up and then for a volume to not increase, okay, and for us to have no real follow through. In that case, I would be really cautious, because in the case of us moving up to 10,200, volume not spiking and buyers not really stepping in, okay, at that point, if we're testing this area again, I would be less certain about it holding, just because at that point we're all assuming that if 10,200 is still resistance, that price likely still has to resolve further down to find some point that we can agree upon. So that's that, guys. That is the live stream. Sorry for the delay. I do apologize about that. I was waiting for people to actually show up. I had the live stream on. There was 0 viewers, so I didn't want to talk to myself, So the first part about this was probably a little bit over people's heads, because I have to remember that when I am talking about it, it's something I've been doing for almost 12 years now. And I have to remember that I'm talking to a layman. So not a layman, I don't want to say that, but I have to remember that I'm explaining this to a beginner, okay? So if you could take anything from it, imagine that the order book is right next to this point right here, okay? So imagine that the order book is right next to this point, buyers, okay, and then sellers above, okay? If this is strength right here, and this support is actually a strong support, what you want to see is this order book stack up. You want to see it stack up, all right? You want to see this area on the offer, okay, above that. You want to see that area start to lift, okay, where the buyers are stacking up, okay, not going anywhere, and sellers are beginning to lift. All right, and then probes, okay, are followed through. Okay, so where there's actual follow through. So just think about it as if the order book is next to the actual price. All right, so I will actually do I'll do a separate video on this where it's not a live stream. All right, so I'll do a separate video on this where it's not a live stream, and I go over the actual order book, and I go over the times and sales. All right, and it'll be a little bit easier then. All right, I'll make sure that I'm able to completely convey and explain it to you. If you guys actually have any questions right now, feel free to ask any questions, and I will get to them. I'm going to get myself a glass of water. I'll give you a minute if you have any questions. Otherwise, we will wrap things up. But if you have any questions, feel free to ask, and we can stay here and answer all your questions. Oh, wow. Okay. Yes, let us know when the next one will occur. Send a tweet about the stream. I coincidentally saw on YouTube main page. Darn. All right, so I'm guessing that you, when you said yes, let us know when the next one will occur. Is that what you're intending on writing? Because all I see is no, this isn't Josh. This is Ryan. This is Cantor and Clark. Yes. Okay, rock on. All right, so that's not the rock on sign. That's like a Spock sign. I'm out of the loop, man. I'm not cool anymore. So I don't even know what hand signs or gestures are. But okay, so send us a tweet about the stream. Yeah, you know what? I didn't want to. I didn't want to give the street. The street. I didn't want to put the stream out in public because you guys are part of Blockroots, and I didn't want to allow just anyone to log in and watch the stream and have any kind of exclusive access to it. I will definitely make it easier, though, to time this properly and to get it going to where I have it set up earlier than the actual stream occurring. So what I'll do in the this is what I'll do. So in the next streams, what I'll do is I will schedule a stream. I will tell you exactly when it'll begin. I'll tell you when I start it, and give like 15 or 20 minutes for everyone to kind of get on, ask questions first, and then we'll begin. Okay. This way we have a little bit more direction. Again, it's not me just flying by the seat of my pants, because I'll tell you what, whenever I started the stream, I was like, oh, no one's on. Shoot. And I was beginning to lose the material in my head that I wanted to cover because I was thinking, I'm talking to myself. That's it. I'm talking to myself. I'm crazy. So, nevertheless, I have 26 people watching right now, so I appreciate everything. But that's what I'll do. I'll make it a lot easier so everyone can be on, access. We could all talk to each other. You could ask me a million questions. You could ask me what I do, what I've done, how long I've traded, where I've traded, all of those things. So I think that I'm probably one of the few people that's on CT. Well, one, I came from traditional markets, and sorry, I'm speaking for a while. I'll talk in a second. I'll look at your questions in a second. I came from traditional markets, so I had a background. I traded equities. I traded futures. So getting into crypto for me was very new because I was not used to talking to people on Twitter that didn't have faces and that I didn't know personally. But nevertheless, this is new to me. But I've been trading for about 12. I would say I definitely was trading from the time I could get myself access to a brokerage account. But professionally, about 10 years, 12 years in markets, 10 years trading, and then as of the last few years, actually operating my own boutique. And yeah, so I am Josh's partner. I'm Ryan, also known as Cantor and Clark. Have I ever used the fib time tool? No, I actually haven't. I haven't used the fib time tool. I will actually look into it. But I use the fibs because the fibs are levels that everyone more or less agrees on, okay, as being important levels. So what happens is that same behavioral psychology, that same pattern, that feedback mechanism occurs where it's self-fulfilling because I say that it works, you say that it works, algorithms are programmed that way, so those levels become important because you and I are using them. So we are creating the gunpowder at those levels to actually move price. And when they don't work, so when a price comes down to a level and it tests and it doesn't work, the same thing happens. You and I are watching that not necessarily act as support, and we're not jumping in at that point because sometimes there's obviously there's a degree of latency between who acts first and who doesn't act at all. And when we don't see anything in terms of actual feedback and price action, we're not going to enter. No one wants to be the first one on the line, right? No one wants to be liquidity fodder and be the first one to step up into no man's land and get knocked down by a seller. Let's see. Just ping that time when delaying started. Yep, that's a good idea. Is LA Wave useful? All right, so I make fun of LA Wave all the time, but don't get me wrong. I am. That's just my personality. I think I think a lot of parts of LA Wave are really silly in regards to. Okay, here's what I'll tell you what I like about LA Wave. So LA Wave is actually part of Dow theory. So it's had more use when talking about human behavior being expressed on charts on larger things such as indexes and massive assets. Okay, Bitcoin is not really massive. All right, the whole crypto market as a whole, being a few $100 billion, is really small. Okay, Netflix has like a market cap of $200 billion, so you get the idea. That's one stock on the S&P 500. So LE Wave is better, okay, if we're talking about how it shows human behavior in the patterns on larger assets where there's more people in it, right? I don't think that it's really useful in conveying much more specifically, okay? I think that what is useful about it is what is useful actually about any trading strategy, okay? And this is why I give it credit. So any trading strategy, okay, or most trading strategies will work. What separates the ones that do work from the ones that don't is discipline and sticking with it. Okay, so a strategy will have certain risk management parameters. So settings where you say you're going to get out of the trade no matter what. It'll have certain rules regarding position sizing, and it'll have rules regarding entries and exits, okay, to the upside. So when you follow a strategy, okay, and you follow a system, okay, you get really good at things like just viable discretion. I use this term a lot. Viable discretion. Noticing when price behaves, okay, how price behaves rather before it goes in your favor and before it moves against you. So you start to pick up on these patterns. You start to get really good at it because you're spending a lot of time using the same thing over and over again. So you're honing it down. And what I think Elliott Wave traders actually are doing well, rather than what happens with Elliott Wave is they have an answer for everything. I'm not knocking on it, but what I'm saying is when something doesn't occur as planned, it's like, okay, I'm sorry. No, this is just this pattern. I was wrong. All right, so fine. What they're really good at, though, is being breakout traders. So buying structural breakouts, okay? And that's what I think. I think they're, in essence, better breakout traders, but they're attributing their success to following this Elliott Wave, right? I think that it gets a little bit lost in the sauce, if you know what I'm talking about, when it comes to how it has like this almost, I don't want to say mystical property to it, okay? The same way that some people say Fibonacci has this there's a pattern of Fibonacci throughout the entire universe. No, Fibonacci works entirely because you and I say it do and we act on it, okay? The 200-day moving average works because we're buying at that location, not because the 200-day moving average is pushing price up on its own. No, it's because we're all stepping in because we're saying it works, right? That's what happens. So I don't want to get too much into Elliott Wave. There are traders who trade primarily on Elliott Wave and they do a phenomenal job. And why? Because they maintain discipline, they stick to a system. That is what separates traders who fail from who succeed, okay? They have enough data on one system, okay, and they sharpen it. That's all it is. So let me get back to this. Do you think BTC will have a new cycle? I mean, a new bear market in 2023? Well, I don't want to predict. I don't want to go so far as try to predict when it's going to occur. Okay, will Bitcoin sell off for a prolonged period of time and make everyone panic that it's going to crash and go to zero? And will everything get really dark again? Absolutely. Why? Because who would take profits, right? I mean, who wouldn't take profits? Okay, smart people are taking profits. All right, people are going to exit at some point. Okay, what type of bear market occurs, that remains to be seen. What I think, okay, and what happens in assets as they grow and as they expand, all right, and have much more capital injected to them, they become less volatile. So, will the bear market necessarily be as volatile as it has been? I would say no. But I would also say, as just as a caveat to all those who really enjoy Bitcoin because of the volatility, that in 20, 30 years, it's really possible that there's not nearly as much volatility. If not, you know, if not me just saying that it's possible as if like you should be prepared, but maybe there's not a high likelihood. Actually, I would say there's a high likelihood that it won't be volatile. Okay. Now, even though it's a fixed supply commodity, and that means that it's like a low float stock, and low float stocks are really volatile, okay, if people are trading them a lot, supply and demand, right? Um, if enough sats are picked up and spread out, okay, and the velocity issue changes with in regards to how long people hold it versus how long they get rid of it, okay, how fast it leaves their hands, the volatility will decrease substantially. If it approaches M1 money supply, M2 money supply, forget about it, okay? So volatility to the downside, I would say, would decrease as well, unless something major and catastrophic happens. Some type of black swan event, okay, which is outside the normal standard deviation of events anyway. And in that case, you're not going to think about. You're not going to. It's not going to be something you're really prepared for. So yes, it will have a new bear market. Absolutely, it's a market cycle. If you are not familiar with market cycles, I have a video on market cycles. I think it's under the Introduction to Markets series. So, missed post part of the March stream. Where and how can I watch it? The replay. Just click on the link. That's it. Once this is over and I hit end stream, it'll be available. Timing is difficult as long as you post them. I will. I will absolutely post them. When you announce the stream, can you please include UTC time as well? Yes. I'm sorry, guys. I am sorry, Toraj and Ayati. I hope I pronounced that right. So, I doubt I did. I'm sorry. But, yes, I live in Long Island. So I live in New York, and I am on Eastern Standard Time. So I will definitely do my best job at displaying all the available times. Okay, so that you guys have to do less work, because I actually know that's a pain in the ass. All right, and yeah, excuse me, my New York is going to come out real fast. Okay, I would say that I probably speak a little bit more delicately than most New Yorkers, a little bit more polished, but um, I will let that out once in a while. Yes, it is a pain in the ass. I have been trying, like, I don't know all the other world times, right? I know what I'm used to as far as being a United States citizen. Okay, so I know, PST, Central Time and Eastern Time. And that's because when I was a kid and I watched TV, I remember looking at things on TV Guide, okay, when you actually had a TV Guide, and seeing that it's at Pacific Standard Time and being like, oh, damn, I don't know what time that is. But other than that, like when I see someone else is posting something and it's on some obscure time zone, or it's on some other part of the world, I have to actually Google it, honestly. Other than that, I have a few clocks that actually are set up on my Apple Watch and actually at my desk that tell me London time, Beijing time, and the important areas. But sometimes I just get lost in the middle. Um, so let's see. Do you mind talking a little fundamentals about Chainlink sometime? Yeah, no, not a problem. I'm not a fundamentals guy. Um, I'm not really a fundamentals guy at all in regards to crypto. Not much of a value guy outside of crypto either. My bread and butter is short-term volatility. So I have investments in things, or we have investments in things. I have investments myself as well in things based on fundamentals, but I would not say that I am a Benjamin Graham by any means. So I'm not a CFA, so I have friends for that, people that do that for me. But I would be glad to get into Chainlink. I'm glad to look into it. Definitely talk about it, just to give you some insight. Josh is definitely that's his line of work right there. That's his bread and butter. Meaning that's his ballpark, not mine. But yeah, we could absolutely do that. What's the lowest time frame that you generally use? No. So I always stress higher time frame, but that doesn't mean I don't use lower time frame. I stress higher time frame because I know who I'm talking to for the most time. I'm talking to, for the most part, people who are starting to trade, and what they'll do is they will enter in a trade based on a higher time frame. So they're entering the trade over here, and they're like, okay, this is at support. Yes, you buy support on the higher time frame. Okay, good, ready, go, buy. So they'll buy, and then they're buying this on the daily, and then this is what they do all day on the 3 minute. They're like, oh my god, oh my god, it's selling, oh my god, and they're managing the trade that they got in on the higher time frame on the lower time frame, and they're freaking out over every move. The only time I go down to, so what I do is I start on the weekly. All right, I'll map out structure, for example, on the weekly. Just to do this really quick, I'll map out the important structure on the weekly. Okay, important areas on the weekly. I'll go down to the daily. I do the same thing. Okay, I'll go down to the daily. I'll do the same thing. All right, real fast, just to do this real quickly. I'll map out important areas on the daily. Okay, and then I'll go down to the 4-hour. All right, on the 4-hour, I have a little bit more of an idea. I hate when the volume profile is on and it does that, and it squashes everything. On the 4-hour, I have a bit of a keener sense of where my entry might be. Okay, but what I do before I enter is I do go down to the lower time frame. So before I go down to trades, I will observe the lower time frame. Okay, in the case of us approaching a support or a resistance, I want to see actually how we are actually coming into contact with that area. Okay, on a higher frequency chart. All right, so this is more so with breakouts than anything else, but I still do have a habit of going into lower time frame just to see how we're responding. So if, for example, we're not getting a strong rejection initially right away, and you could see this on a higher time frame, right? You could see this on a higher time frame candle as it's developing. You will see a rejection, but on the lower time frame, I want to see an immediate rejection from resistance or support, in the case that we're being supported. So I will go down to the lower time frame. I would not make it a habit though. If you get into a trade on the higher time frame, you exit on the higher time frame as well, right? You don't go down to the lower time frame and start freaking out. At this point, you should have defined where your stop is, and you should have a definite area where you're going to get out of the trade, and you shouldn't be changing it and evolving it as the trade moves along. If you get into a trade on the 5-minute, stay on the 5-minute, right? So stay on the 5-minute. Don't go into the higher time frame. They'll do you no service. Another thing I talk about though is higher time frame evidence trumps lower time frame evidence. So when we have a higher time frame trend that's in place, okay, we're not going on okay, so say in the example of the higher time frame trend is up, we're not on the lower time frame trying to build cases for shorts for trend reversal, right? So we have to keep in mind the higher time frame always, okay? All right, so what's the higher time frame as I'm looking on the lower time frame chart? Remember, Ryan, it's up. Okay, the trend is up. Okay, so channel will grow, subscribe. Yes, nice channel. Thank you. Hi, Ryan. Hey, Derry Duke. I would actually love to get to know all of you guys because I'm huge with knowing names. So, little short story. I went to college and I originally studied biochemistry. Okay, I wanted to be a doctor. I wanted to be in markets since I was a kid, but then I wanted to be a doctor. I think it was around the time of Hurricane Katrina. Something clicked in me. I remember seeing, I don't know what it was. For some reason, I was like, no, what I'm doing, this is silly. I was thinking what I'm doing by getting interested in markets and finance is worthless. I should be a doctor. I really soon realized that I had a passion for biology and chemistry and those two combined, and sciences as well. And I still, every day I listen to like science podcasts. I do a lot of reading on biology on my own. It's something that I'm really passionate about, but I just could not stand to do it for lab, for example. So when I was in college though, what did I do on the side? I bartended. I loved it. It was awesome. I bartended in an area where there were a lot of finance guys, a lot of traders, which was perfect because that's all I would talk about. But I got one thing I really enjoyed was my experience working in a restaurant, okay, because it taught me the value of relationships, okay, getting to know people. All right, the importance of remembering someone, what their drink was, what their name was, okay, remembering what they told you the last time you met them, okay, getting to build a rapport with people and getting to know them. I think that's the most important thing for anything you do, okay? For anything you do, it's the relationships you have. So I want to get to know all of you, and I swear I would be remiss if I said that I would remember all your names, but I'm gonna try to really get to know you guys as long as you interact with me, right? So I'm learning as much as I can. What would be the first steps to begin with? TA, what else? Obviously, there are no schools for that. Well, I suggest you pick up a bunch of books and take an academic approach. So what happens on CT is you see like a 15 million different approaches, and don't hold me to that number, but you see conflicting approaches. You don't really know who's doing the right thing or the wrong thing. So start yourself in a book. Get something like Technical Analysis of the Financial Markets. Get a basic TA 101 book and read it back to cover like 3 times, okay? If you love this stuff, you'll read it fast, okay? And you'll want to pick it up again. So then you have a basic framework. So you have what I'll say is an axiomatic framework for moving forward. You have a framework, all right, and then you'll know, and just get back to the New York side, you'll know what's bullshit and what isn't, Okay, and you'll say, nah, that's not true. I know that, this has to do this. I know that one of the main tenets of TA is that, let's say, volume must confirm the trend. Okay, so, you'll have this foundation that you'll build. Okay, and from that's where you really sharpen. So, you don't go to school for TA, but you learn it the academic way, I'd say first. Learn it academically, and I say learn it academically, I mean pick up a book. And then, follow. I'm going to be doing a bunch of stuff, and I'm pretty sure that you could take what I say seriously. Although I will say that the technical trading that I did outside of crypto, so in traditional markets, the technical trading I did for the money that I manage was very different than what I'm trading, how I'm trading cryptocurrency. All right. So, but I do have a tremendously strong grasp on TA. I would say that I don't need to be. I don't think that I should be humble in that regard. I'd say most people that I see have a pretty tenuous grasp of it. Even people that are saying that they are TA gurus. All right, that's the one thing about Twitter which is kind of disconcerting. It's that you have people that are hiding behind avatars. You don't really know if they have any background in what they're doing. They kind of can be anybody. It's a little bit, like I said, disconcerting. But nevertheless, I've been doing this, right? So, hey man, can I watch a lot? Yes, you could watch this. Thanks, Ryan. I'm a complete beginner, non-English speaking background. Yes, you could watch this over again. If you don't understand anything, Moon, message me. Will you speak about us breaking out of the wedge today? All right, so yeah, let's talk about breaking out of the wedge real quick and why that was kind of a failed breakout. Okay, so if this was considered a breakout, so how do you break out of a wedge? Let's just talk about it. So you could draw lines, right? Now, where are you connecting your lines? Some lines are connected differently. Some people have them connected so they're on wicks. Some have them connected on candle bodies. What I want is the most amount of confluence between candles and line, right? To an exterior and, in this case, the support below. But how do you break out of a wedge if you don't move up and down, impulsively? You break out of it by going through time, right? So no matter what, when you have a trend line like this, okay, if you move sideways long enough, you break out of the wedge. Now, if we broke out of this wedge and it occurred on high volume, then I'd say that it was important. But I don't think we did that yet, so I wouldn't say that there was much of anything to pay attention to in regards to breaking out of the wedge. This is the point where I would want to see that just the support is maintained. I don't think it's not necessary that I see that we break out of this tremendously right now. If we just started to grind higher, I'd be really happy. That'd be a really positive thing if we just start grinding higher. Okay. Let's see. Can we see 8K? Yeah, we can see 8K. We could also see 7K, but that doesn't. That's because we could see anything really. There's no reason why we can't. This is a highly reflexive market. Do I think on balance probabilities that we see 8K? It depends. If we break 9,400, I go to the next target. That's how I operate. It's very formulaic in that regard. So level to level, buddy. And I'm not saying buddy, like pay attention, buddy. I just mean like, let's take one step at a time. All right. We'll cross that bridge when we get there. We have to worry about one level at a time. All right. $8,000 Bitcoin is let's just look at that on the chart real quick to give you an idea where that is. $8,000 Bitcoin is dangerously close to this lower portion of this major structure. All right. So I do not want us to be down there. But can we be down there? Yeah. Do I think we're going down there? No. My opinion right now that we're holding this area, I don't think so. If we break through this on heavy volume, absolutely. That opens up that door. But that's how I sometimes I just don't like trading crypto Twitter to begin with, because it's full of that. It's full of yeah, you know what? If we break 10,300, 10,500 it is. And it's like, yes, obviously, we get it. If price keeps going up, then it's going up, buddy. Yeah, okay, we get it. All right, you said a lot there. That's why I think it's important to point out all these other things that aren't talked about. And this is what you're using. If I'm trading traditionally, this is what I'm using. Okay, so most useful indicators you personally recommend: MACD and RSI. The MACD, moving average convergence divergence, and the RSI, those are very useful. Yeah, RSI is useful in a ranging market more. than anything else. MACD is a momentum indicator, so it's useful in a trending market, up or down. Both of them used together, though, can be helpful, especially in oversold areas in a bull market. The indicator on the right of the screen, this right here is a volume profile visible range. So the two types of volume are volume by histogram and hey guys, my fiance just got home. Volume by histogram, so volume by time, and then volume by price. And this is particularly important because it shows you where the most trading took place, which could give you an idea as to where supports are and resistances are. So for example, we're right now between, hold on one second, just take out this tool. So these areas where there's large spikes, okay, where a lot of trading took place, you can see how they more or less coincide with, okay, where our major supports are, where we've kind of gap between. Okay, what I'm talking about is over here, if you're wondering. See where we have high volume, okay, dips in, okay, all right, high volume, coincides with the support, begin to taper off, and it opens up again right as, oh, this adapts as you move the chart, I should mention that. So as I move this, it's going to adapt to take in all the price action that has occurred up until this point, and at that point it'll evolve to show us where the actual support is, or rather where the trading took place. But this gives you an idea. So for example, this area right here, see where this is? This is around our major structure area down here. So it goes without saying that these areas where there's a lot of trading that took place will likely serve to be an important area to interact with in the future if we come into contact with them. So position time frame, anywhere from if it was, let's see, it depends. Sometimes I will get down on the lower time frame and I'll hop in and out of a really strong trend, like towards the end of the move up to 14,000, and I was a bit more active because it, you know, by all means the top was at that point arguably close, and I was trying to scrape in and out as much as I can, but most of the time it's actually anywhere from 4 hours, 4 days, up to 2 weeks. So swing trading. Gold supply. Well, it can't reach gold supply because it's a different supply. Gold market cap, probably not. A decent portion of it, of the allocation that traditionally gets allocated towards gold, yeah, I'd say so. If it captured 1% of it, that'd be amazing for the price. All right, so I'm going to answer these last 3 questions before I head out, and then we'll figure out the next time to do this again. What kind of indicators are you using on TradingView? So on TradingView, I want to know where the moving averages are in relation to price when it's a really strong trend. All right, I have these price action indicators currently lit up, and what they do is they show me where high volume candles were. Okay, so candles that are in strength, rather, are multiples larger than what is considered average movement for candles. So I want to see where these large pushers occur, especially around breakout areas. And then I have what are considered engulfing candles labeled. So I want to see where, for example, if price moved up, where if there was an engulfing candle right after it that completely swallowed the entire move, I want to know about that immediately. I don't want to have to try to discern that visually. I want to see those things right away, because that immediately says that something was either shut down, or in the case of buyers engulfing previous price action, eaten right up. And then I'll have just for the sake of this live stream, I put on the volatility indicator. I don't usually have that open. I have the ATR open. I don't usually have that open because I actually will use a volatility stop, okay, which is based off the ATR. All right, I have a video on volatility stops. But I will use the moving averages in a really strong trend. I'll use an RSI in a ranging market, okay, and then on-balance volume. Actually, most likely just the on-balance volume, price action, and maybe incorporating some type of moving averages. The on-balance volume is probably the most important thing because it's cumulative volume. Essentially, it's a volume momentum indicator. I have a video on that separately if you want to learn up on that. But I use trading technologies, and I use the cumulative volume delta, which shows the difference between aggressive buyers and aggressive sellers, and then I show the individual volume at the bid and individual volume at the offer. So I use those 3 things primarily. On TradingView, this is for the sake of sharing charts and showing where the actual trend is. So in that case, I'll use these indicators. But I use the volume profile visible range pretty much all the time. Let's say you have to lose a lot of money learning before you become consistent and profitable. No, you have to lose a lot of money learning if you incorrectly apply, right, incorrect position sizing and poor risk management in terms of not using your stop or listening to it. You don't have to lose. Most people just do because they don't have discipline in the beginning. Do you know Bob Lucas? He's in New York. No, I don't. Actually don't know him personally, but I know him on Twitter. But yeah. All right, guys, so that's it. So look forward to the next time we do this. I will schedule it well in advance so you all have a more clear understanding of when it is. And we'll do a little bit of talking before. And yeah, so thanks for showing up, guys. All right, everyone have a great night. If you have any questions, feel free to message me on my direct message. All right, guys, thank you.